Welcome to Explain the Charts, where we break down the news and the chart data to give you a comprehensive understanding of market trends. Today, August 29th, we're focusing on the EURUSD currency pair, which has been experiencing some interesting movements. Let's start by examining the current events that might be impacting the market. A recent Google search reveals headlines about a marked decline in the EURUSD, hitting multi-day lows. This decline seems to be influenced by factors like soft German inflation and the US dollar's recovery. However, it's crucial to remember that market movements are not always driven by news alone. Technical analysis, which involves studying charts and identifying patterns, plays a significant role. So, let's dive into the charts and see what they tell us. Switching to the daily chart, we observe a clear downward trend in the EURUSD. The price has been steadily declining over the past few weeks, suggesting a bearish sentiment. We can see that the price has broken through a key support level, indicating a potential for further downside. This decline is further reinforced by the fact that the euro has been weakening against the US dollar. The recent news about soft German inflation aligns with the bearish trend on the chart. However, we need to look at the smaller timeframes to get a more detailed understanding of the current market dynamics. Now, let's take a look at the 1-hour chart to get a better sense of the immediate market sentiment. This chart shows that the EURUSD has been consolidating in a range for the past few hours, with the price fluctuating between support and resistance levels. It's important to understand that consolidation periods can often precede a breakout in either direction. Traders need to closely watch the price action during consolidation phases to anticipate the next move. In this case, the consolidation could lead to a breakdown based on the current downward trend. Let's zoom in on the last 24 hours of the 1-hour chart, as this might provide valuable insights. We can see that the price has been trying to break above resistance, but has been met with selling pressure. The fact that the price has failed to break through this resistance level suggests that the bears are still in control. Furthermore, we can observe a bearish engulfing pattern, which is a strong bearish signal. This pattern indicates that the sellers have overpowered the buyers and pushed the price lower. This bearish signal on the 1-hour chart reinforces the bearish sentiment observed on the daily chart. Finally, let's shift our attention to the 15-minute chart to see the very short-term dynamics of the EURUSD. This timeframe provides a granular view of the market's immediate reaction to news and events. Analyzing the price action on the 15-minute chart can help us understand the current market momentum and identify potential entry and exit points. It's important to note that the 15-minute chart is often very volatile and can be influenced by short-term factors like traders' reactions and news. We can see that the price is currently trending downward on the 15-minute chart. This short-term bearish trend might be a result of traders taking profits after the recent rally, which aligns with the current consolidation observed on the 1-hour chart. To summarize our analysis, the EURUSD is currently facing a bearish sentiment based on both the news and the chart data. The daily chart shows a clear downward trend, and the recent news about soft German inflation further reinforces this bearish outlook. The 1-hour chart indicates a consolidation phase, but the bearish engulfing pattern suggests a potential breakdown. The 15-minute chart shows a short-term bearish trend, which could be a result of traders taking profits after the recent rally. Based on our analysis, the key price levels to watch are the current resistance level on the 1-hour chart and the key support level on the daily chart. If the EURUSD breaks through the current resistance on the 1-hour chart, it could signal a potential bullish reversal. However, the likelihood of this happening is low due to the overall bearish sentiment and the failed breakout attempts. The conditions that would reinforce the likelihood of a bullish reversal are a break above the resistance level, a sustained move above the 200-day moving average on the daily chart, and positive economic data from the Eurozone. Conversely, if the EURUSD breaks down below the key support level on the daily chart, it could indicate a continuation of the bearish trend. The likelihood of this happening is moderate, given the current bearish sentiment and the breakthrough support levels. The conditions that would reinforce the likelihood of a bearish continuation are a break below the support level, a sustained move below the 200-day moving average on the daily chart, and weak economic data from the Eurozone. When making trading decisions, it's important to consider the timeframes, price action, and key levels we've discussed. Remember that market conditions can change quickly, and it's essential to adapt your trading strategy accordingly. Always manage your risk effectively and never invest more than you can afford to lose. Stay informed about the latest news and economic data that could impact the EURUSD market. Continue to monitor the charts for any significant changes in price action, volume, or technical indicators. Happy trading! Thank you for watching Explain the Charts.